And Deutsche Bank sees initial public offerings and bond sales driving South African deals this year after a record 2017. The head of corporate finance for Deutsche Bank's Johannesburg-based unit, Simon Denny, says the country's capital markets are buoyant, driven by global sentiment, and a backlog of IPOs that were due to happen late last year will now happen in 2018. Business confidence in South Africa is rebounding after Cyril Ramaphosa succeeded Jacob Zuma as head of the ruling African National Congress and president. According to the bank, South Africa remains a relative safe haven given its legal framework, good corporate governance, and liquid capital markets, which allows investors to come in and out. Well, I guess Janelle is back to us. Hello, Janelle. Good afternoon. Thank you for joining us.
Good afternoon to you. A little late, but we're here.
So do you think the stock markets are overreacting since Thursday to the latest U.S.-China trade spat?
Well, they might be overreacting in the sense that nothing has really happened yet, but we're at a stage before the consultation period. Be that as it may, this reaction is very real, and a lot of that is fueled by the uncertainty. It's not clear which industries are going to be targeted at the moment. The White House is supposed to say which ones in 2 weeks, after which American businesses will have 30 days to comment on that list. So companies have to wait at least a month for more clarity as to how their supply chains may be affected. And, you know, of course, a lot of them have a lot of European companies have exposure in China and in the U.S. because of their manufacturing sector. And they're also not sure whether the EU exemptions on the steel and aluminum tariffs will be made permanent, whether they'll be kept past May. On top of all of that, there's also the Chinese response to the tariffs to contend with they are measured for now, but maybe they're not going to be so measured later. And that's all of that is having a very negative effect on investment decisions. And there doesn't seem to be that much of an indication of a reversal at the moment.
And where do the European Union stand on this widening global trade brickbat?
Well, remember that, like I said, the EU has been exempted for now from the steel and aluminum tariffs, so they're able to heave us a sigh of relief in those terms. We've also just heard from German Economy Minister Peter Altmaier, who said that he was happy at this outcome. But let's not forget, this is a temporary reprieve. It's not clear that this exemption will stick. And, you know, Trump has criticized the EU for a long time. He still has a bone to pick with the EU in terms of the EU still having its largest trade surplus with the U.S. So this particular point of contention may still find room to express itself. Now, of course, the EU doesn't have to be in a trade war itself to be affected. Whatever happens in a trade war between the U.S. and China could affect supply chains of European companies exposed to both markets. And if a trade war impacts growth in China and the U.S., then that can depress the demand for exports. That's not a good development for any export-oriented economy that sells to these countries. There are quite a few of these export economies in the European Union, as we know, like Germany. So the EU stance, of course, is that trade wars aren't helpful and there can only be losers.
And in corporate news, Deutsche Bank Asset Management IPO has fetched much lower than expected. Any information on why the IPO wasn't really a runaway success as anticipated?
Well, Jimmy, the opening share price of 32.55 euros was actually a bit higher than the issue price announced on Thursday. That was 32.50 euros. The price per share for DWS, that's what this asset management arm is called, it did come in at the lower range, although it's still expected to rake in 1.4 billion euros for Deutsche. But the problem here might actually lie in DWS's governance structure. Now, it's a partnership limited by shares. That's what's known as a KGaA here in Germany, and that's just not something that a lot of investors are familiar with. On top of that, it's also a model that gives outside investors less control. So before this IPO, analysts identified that as something that could negatively affect market pricing, and it would seem that they were right.
All right, thank you very much for your time, Janelle. It's been a wonderful time out with you this week. Enjoy the rest of the weekend. And MTN Group Limited Ghanaian unit has lifted its target for an upcoming initial public offering by more than a half to 3.48 billion cedis. That's about $787 million. Africa's biggest mobile phone company by subscribers is preparing to list a 35% stake in its Ghanaian business on the local stock exchange, valuing the unit at about $2.2 billion. While the bourse estimated the value of the stake at about 2 billion cedis in February, the assessment was raised after a fresh valuation of the company. The sale is likely to start in April, even though the Securities and Exchange Commission still needs to approve the listing's prospectus. If successful, the share sale will exceed by more than 10 times the Ghana Stock Exchange's previous biggest IPO, when Agricultural Development Bank Limited raised 326 million cedis in December 2016. MTN is listing the stake to meet conditions agreed to in 2015 when it acquired the right to use spectrum that can carry high-speed mobile data for customers. In the meantime, Ghana is considering selling Africa's first samurai bond in 17 years. Finance Minister Ken Ofori-Atta is planning to visit Japan next month for talks on the possible sale. Ofori-Atta will meet Japanese officials, investors and lenders from April 9 to 14 to discuss a debt issuance and to finalize a bilateral investment treaty. A samurai issuance by Ghana will be the first from a government on the continent since South Africa sold 90 billion yen in 2001. Ghanaian lawmakers will vote today, being Friday, to approve a sale of as much as $2.5 billion in sovereign debt. And Gabon plans to revive its hydrocarbons law to attract new investment. Under the current legal framework, the Gabonese state holds a minimum 20% stake in oil projects. The state oil company has the right to a stake of up to 15%. That law was implemented in 2014, the year that the market was shocked by a 50% drop in prices from over $100 a barrel to around $50 due to global oversupply. Like other oil-dominated economies of the Economic Community of Central Africa states, single currency zone, Gabon has struggled due to the decline in crude prices, forcing it to seek support from the International Monetary Fund last year. A panel of legal, economic and tax experts will meet from March 26 to 28 to look at changes to the law. Companies operating in Gabon including Royal Dutch Shell, Total and Tulu Oil. We'll take a quick break, and when we return, Africa's only female president set to step down after an alleged financial misconduct. To stay with us.